Denton County prices were down roughly 6% year over year. Collin County prices were down about 2%. Dallas County prices were essentially flat, and Tarrant County prices were slightly up, which is why you may be hearing mixed messages about the Dallas housing market, like buyers are back, homes aren't selling, prices are dropping, and the frustrating part is they're all right, just not in the same places and not for the same reasons.
And if you're thinking about buying or selling in 2026, this is exactly where people either make smart moves or listen to bad advice that sounds like protection, and then they regret it later. If you want to understand how to actually win in this market, you need more than generic Dallas real estate headlines.
We're Bret and Molly Chance, owners of Texas Home Life Realty right here in Flower Mound, Texas. And this video is actually part of a collaboration with some of the top real estate YouTube agents across the US and Canada. Similar headlines, but very different local realities. So if you want to check those out, you can find their market updates linked in the description below. So let's get into the numbers.
Before we get into individual cities, we need to set the baseline for what's happening across all 4 main counties that shape the Dallas-Fort Worth market. This matters because January numbers can look alarming if you don't know what you're looking at. When you look at January across Denton, Dallas, Collin, and Tarrant counties, the market followed its usual seasonal slowdowns, but with a little less activity than we saw last January. Closed sales were down year over year in all 4 counties, which tells us demand did not disappear, but buyers are more cautious than they were a year ago. Days on the market increased everywhere. On average, homes took about 10 to 20 days longer to sell than they did a year ago. Inventory moved up as well. Most counties are now sitting in a 3 to 4 month supply range, meaning it would take 3 to 4 months to sell every listed home if nothing else came up for sale. We're easing into a more balanced market, not really a seller's market or a buyer's market overall. But it's a big shift from the super tight conditions people remember a few years ago. Now, let's talk about pricing. As we mentioned in January, Denton and Collin County prices were down, but in Dallas and Tarrant counties, prices were flat or slightly up. So yes, some parts of DFW did see prices dip a bit in January. Other areas held steady, and some actually moved up slightly. That's why the headlines feel so confusing. Nothing dramatic happened all at once. What we're seeing is different parts of DFW reacting differently at different speeds, which is actually how real estate normally works.
This is where perspective really does help. First, let's talk about the long-term real estate cycle. This graphic shows how real estate has moved for decades. Periods of growth followed by pullbacks or bust. Here's what's interesting. The Great Recession ended around 2012. From there, prices climbed steadily for years. Then things accelerated very quickly from 2020 through mid-2022, peaking around June of 22, which puts it at the 10-year mark since the ending of the Great Recession. What happened next is what always happens, a bust or correction after a booming decade. Historically, corrections like this last from 2 to 5 years, not forever. We're now about 3.5 years removed from that peak, which helps explain why the market feels different than it did just a few years ago. Now, let's look at a second graphic, the seasonality of home prices from the Texas A&M Real Estate Research Center. This chart shows what typically happens every single year. January almost always looks like this. Sales slow down, prices flatten or soften, inventory builds. That's normal seasonality. When you stack normal seasonality on top of a longer-term correction, January can feel a lot scarier than it actually is. Fewer people move, fewer homes close, and every change feels bigger than it actually is. But the good news is that there are patterns that real estate follows, and it looks like we're almost through this current correction.
Interest rates are another thing we're watching and the reason some buyers are hesitating. The Federal Reserve held rates steady in January after 3 cuts in the second half of 2025, which was widely expected. Most economists don't expect meaningful cuts until at least summer. Even then, they're talking about small changes, not dramatic drops. Mortgage rates don't move directly with the Fed. They move based on inflation, world events, and investor confidence. So if someone is waiting for a big rate drop before making a move, that may not happen the way they're hoping. And while people wait, the advantage they're hoping for often shrinks without them noticing.
This might surprise some people, and that's okay. The people who tend to do well in markets like this are often the ones who move before everything feels comfortable, not after. That doesn't mean everyone should do that. If it feels too risky for you, that's completely valid. But historically, when things feel obvious and easy, that's usually when competition is already back. Prices are firmer and choices are fewer. When the market feels slower and less certain, buyers and sellers tend to have more room to make thoughtful decisions instead of rushed ones. Again, not a rule, just a pattern that we've seen over and over again.
If you're trying to sort through all of this and figure out what your best options are, whether that's selling, buying, doing both, or even just staying put for now, we're happy to talk it through with you. You can schedule a discovery call with us using the link below. We'll look at your situation, your timeline, and your numbers and help you decide what makes the most sense for you right now.
One of the biggest mistakes we're seeing right now is people trying to time the market instead of understanding how their specific area is behaving. January data doesn't tell you where the market is going. It tells you how buyers and sellers are reacting right now. Across DFW, buyer demand hasn't disappeared. We know this because mortgage applications are actually up. Buyers are just slower and more cautious. They're more selective, and they're far more price aware than they were just a few years ago. That's why the real story isn't whether homes are selling, it's which homes are selling, where they're selling, and why.
Let's talk specifics. In Flower Mound, prices are mostly flat year over year. Days on the market are up about 10%, but sellers are still getting close to 95% of the original asking price. Inventory is up slightly, but it's still tighter than in nearby areas. Argyle looks different. Prices are down more noticeably year over year. Days on the market are up more than 70% longer than last January. Sellers are averaging closer to 89% of their original asking price. New construction plays a big role here, creating more competition for pre-owned home sellers, giving buyers more leverage. Northlake leans closer to Argyle. Inventory is higher because all the new construction. Months of supply are around 4 months, and sellers are seeing more price reductions and concessions. Buyers are clearly negotiating harder here than they are in Flower Mound. So even though these towns are close together, the experience of buying or selling in each one right now is very different.
Now let's talk about what all this means for real life decisions. If you want to sell, it's important to understand that you may not get what someone got in 2022 when they sold their home. But pricing realistically from the start often saves more money than chasing the market down later. The market data shows that when sellers price high and chase the market down, continually adjusting their price, they typically sell for less than they would have if they priced based on the current market conditions at the beginning. So pricing right up front can actually make you more money. Now, if you want to buy, you're in a strong position. There are fewer bidding wars, more room to negotiate, and more time to make decisions. Now, there is a caveat, and the homes that everyone wants, the ones that are priced right, they look amazing, they are still drawing multiple offers in just a few days. So be ready. And if you're thinking about selling and buying at the same time, perspective really does matter. Yes, you might sell for less than you could have a few years ago, but you're also buying in a market where prices have softened and competition is lower. Those two things usually offset each other more than people expect. Now, some people are putting their lives on hold waiting for the perfect time. And historically, that perfect moment rarely shows up. What matters more is whether a move makes sense for your situation, your finances, and your timeline.
Our next video is especially important to watch if you're considering selling your Dallas area home in 2026. We'll show you the biggest trap you need to be aware of and how to avoid it. We'll see you there.